Hi friends, good morning. Welcome to this pre-market report where we try to find discounts and premiums on a chart of Nifty. This is Nifty on a monthly time frame. It is structurally bullish. This is a low that was created in the month of April, and this is the next low that was created in the month of August. So it has created a higher low, and therefore on a monthly time frame it is bullish. Let's mark the important levels. First being ATH 26,277. I'll mark it in red. That's the next big discount. The other important level on the opposite side, the premium is on 24,337. That's the previous swing low made in the month of August. There's another interesting level. These two candles form an order block. That is the July and August candles. So let me just draw a measuring tool from the top of the body of the previous candle to the top of the body of the next candle. So these two candles, the bodies of the candles are where major of the trading has taken place, and the midpoint of this represents the mean value of the price that was traded at, and that, according to me, is an important level. So that is approximately 25,000. So 25,000 is an important support for Nifty if it decides to come down. Now going back to the weekly time frame, here too it is bullish because you see this is a low and this is another low that's created, and this low is higher than the previous low. So higher lows means bullish bullish. And what are the important levels? This is an order block. This candle, that is the 22nd September weekly candle, is an order block. The center of it is almost marked, falls almost similar on similar lines with the monthly order block, and I wouldn't mark it again. It's almost 25,000. But there is an important weekly candle here. You can see this candle. Let me mark it in 2 pixel. This is a flat top. A flat top and a flat bottom are important candles from a technical perspective. Well, it has got a tiny bit of a wick there, but well, let's just keep it marked. Let's see how Nifty behaves at this level, and this level is 25,660, 25,600. So that also there were 3 candles that took Nifty to ATH, and then from there the huge selling came. So just for curiosity's sake, let me just mark the midpoints of these, assuming they're an order block, and see where the line falls. Okay, I'm just going to keep this mark and see how it behaves tomorrow if Nifty decides to come down. Okay, that is, oh, that's 25,500. So 25,500, I think being a round figure would be a better support than 25,660 that I'm talking about. Let's see where Nifty goes tomorrow. On a weekly basis, if you go by candle signs, this is a proper reversal candle, but reversal candles are effective only at important zones of support and resistance. Well, it's very close to the 88, so let's see how it behaves. Go to the daily time frame. Well, in the daily time frame, let's see, has this low been taken? Yes, a previous low has been taken, and this high created is lower than the previous high. So that means on a daily time frame, Nifty has become bearish, which obviously is not a good sign. not looking to take any trades on this. And if Nifty has turned bearish, then this candle right here is the order block that has driven Nifty down. So that becomes an important candle or a candle of interest. So let's mark the midpoint of it. Now, if Nifty decides to come back up, take a bounce and come back up, and then this is going to be an important resistance. Let's go to the 4-hour time frame. Again, this was a high, that high was taken, this was a low, that low was taken. So we have a situation where we are not sure of the bias on a time frame. So it's not advisable to take trades on that time frame. Now let's go to the hourly time frame, and in the hourly time frame it is this high and then this high. So it's a lower high that's being created, so it is bearish. Yeah, it has always been bearish. So now the point is, with confusing biases across different time frames, it is advisable for a trader like me to not take trades. I do option buying, and then I do not do scalping. I ride it from I do retracement trades. I take the trades into a retracement and then ride it until the target. So it's not advisable in these kind of markets. So I would most probably not be trading. That's it. Thank you very much.